My job is reasonably simple this year because the main focus this year has been AASB 13. And given that Bob has talked around the major changes through the discussion on NCAPs, I thought I might just give you some brief areas of focus around what audit's going to be looking for around AASB 13. And I know Karen's also going to highlight some particular areas as well. There's also 3 standards that are going to hit from 14-15. And the main thing I suppose I want to stress at this point is you have a requirement to talk about the impact of future standards on your agencies. And whilst the sunshine accounts have actually disclosure or draft disclosures in them, you really need to tailor them to suit the circumstances of your entity. And you really should be thinking about some of this stuff now because it's not straightforward. And the other matter I'll talk about is the ACCN requirements. And again, it doesn't apply to most government agencies, but there are some that the rules do apply to. In terms of the expectations around the fair value, I've just highlighted a few things that I really think you need to be thinking about. So it's about understanding the significant changes in the agency's revaluation policies, and they should be disclosed in your accounts. So the key assumptions, the valuation techniques, auditors are going to be looking for evidence or justification to why you've actually taken the approach you have. And it's not just about because the minimum reporting requirements say it is. You need to understand it from your own perspective. Also identifying the fair value hierarchy levels and input assumptions and the grouping of the assets in respect to their fair value hierarchy levels. It's fair to say we've taken a fairly strong practical approach around the implementation of this, and Alison's comment around the fact that it's going to be probably a 2 or 3 year journey before we actually get this bedded down well. The other thing I want to stress is that AASB 13 is only about fair value. The requirements to actually revalue is still all sitting in 116, so you need to be mindful of that. As Bob mentioned, the comparatives are not required, and I think that's a big saving grace for most people. But also make sure you've got a separate note in your statements around how you actually measure fair value. And finally, look at disaggregating your fair value hierarchy level to reconcile to your financial statement line item so we actually can understand that. Subsequent years for AASB 13, so talking about, again, transfers between the hierarchies. There's some discussion going on about how practically we can actually implement that across government. It's fair to say that most classes of assets are really going to fit in primarily in one level. So if there's a way that we can actually streamline that, and I suppose most of you don't have direct involvement with doing whole of government accounts, it really complicates the disclosures at that level if we have a significant amount of transfers between levels. So we're going to try and come up with a way of actually being able to do that. Again, I talked about changes in valuation techniques and also the reconciliation. So make sure that the key components of the reconciliations are actually disclosed there so it's logical, I suppose, and understandable from a reader's perspective. Bob also mentioned a little bit about financial instruments and the disclosure requirements around AASB 13 and financial instruments are independent and separate, taking into account the fact that there have been standards around financial instruments. So you need to, I suppose, understand the nuances around that. And I think, again, the NCAPs are fairly clear in the way that you need to consider. 14.15, consolidated financial statements. There's been some really interesting articles out just recently. Some people get Charter magazine. It actually talks about some of the control issues that are actually faced by public sector agencies, and I encourage you to have a look at that article because it's very relevant. There's a range of things that have changed, but primarily, and it's about the definitions rather than the actual requirements. So you need to almost unpack everything that may consolidate into your current accounts and actually look at it, and look at it on an annual basis because the circumstances might actually change. Now, I understand and I acknowledge that the NCAPs came out late this year or later than everyone would have liked. Alison and I have actually given a commitment to actually ensure that we get guidance around these standards in particular as early as we can. So our target is pre-Christmas, which I think everyone would think would be a much better outcome for everybody. So that's our aim for this year. And we might even start engaging early about particular issues that agencies might have or need to think about in terms of these standards. In the interest of time, I'll cut through these pretty quickly. But again, there's a lot of information around the sorts of principles that you need to understand in terms of assessing control. The voting rights, again, potential voting rights is an interesting issue. Also the relationships that the agencies have and delegated decision powers. So there's a whole range of things that we need to think through. And also relationships with structured entities. The ACCN, which is the Australasian Council of Auditors-General, has had significant input to this one. We've provided comment back to the AASB, particularly in relation to international standards. 1055, I think most people would be aware of this one about the need to report budget information in financial statements from 1415. We've had some discussions around whether there needs to be any changes to the STS to allow this to happen. There's still some discussion going on at a range of levels around what significant matters would need to be reported to get some guidance out for people. But certainly for 1415, this is going to be something that your auditors are going to be concentrating on in terms of actually having meaningful explanations for movements in the numbers. AASB 124 around related party disclosures. It doesn't really change the current practice, particularly around key management personnel. That's a prescribed requirement dictated by Queensland Treasury. But it's fair to say, if and when ED 214 comes in, that there are a range of grey issues that we're going to need to try and understand about the relationships and disclosures, including things like whether local governments are actually controlled by the state, whether the minister is actually a related party of state entities, etc. So they're just two that we need to puzzle around. The last matter I want to talk about is just the ACNC. If you have a look at the legislation, you'll see that the definition of what a government entity is by and large captures the vast majority of state agencies, so this stuff's not applicable. But I'm aware of a number of agencies that do have charitable status and they will need to comply with the requirements. There's also some talk about some university-related entities also having a similar requirement. Can I just ask you to assess your own circumstances and again talk to your auditor if you have any concerns about the application of the regulations or not. A couple of things I also want to flag with you just at the end, if I can. On the AASB website, there's actually a really good staff paper released recently, which talks about to disclose or not to disclose, and gives you some practical examples of the sorts of considerations you need to take into account when you're assessing your note disclosures to decide whether you should include it or not include it. It's actually well structured and it actually goes through the logic and the arguments about why you should or shouldn't include things. Can I just recommend that you have a look at that article just in terms of when you're tailoring your Note 1 in particular to year-end accounts. The other two that I'll flag, we all know that the leasing standard is currently being revised again for the nth time. I'm not anticipating that anytime soon is going to happen on that, but it's certainly a watching brief. The other one's around the new potential revenue standard. There's an ED 222 out at the moment. Again, it's highlighting a number of issues. The AASB were talking about it being released in the first quarter of 2014. I see subsequently it's going to be later this year. I think we just wait until it comes out and then worry about it. It's certainly going to have a fairly lengthy implementation period anyway, so I think we've got a little bit of time on our side. But we'll certainly give you some more information in conjunction with Treasury when it becomes available.